Hello everyone. In today's video I show you 7 concrete risks associated with CBDCs, so central bank digital currencies, and why you should be wary regarding CBDCs. So CBDCs carry several concrete risks that could impact individuals, financial systems and societies. Here are some specific grounded risks based on current understanding and analysis. First, loss of financial privacy. Unlike cash, which allows anonymous transactions, a CBDC could enable central banks or governments to track every transaction in real time. For example, a CBDC is implemented using a centralized ledger. Authorities could monitor what you buy, where and from whom, potentially exposing personal habits, political affiliations or lifestyle choices. This risk is heightened if privacy-enhancing technologies like zero-knowledge proofs aren't adequately integrated, as seen in early designs like China's digital yuan, which ties transaction to user identities. And if you want to know more about zero-knowledge proofs, you will find a video in the description of this one. Control over individual spending. A programmable CBDC could restrict how, when or where money is spent. Governments might impose limits, say blocking purchases of certain goods, for example alcohol, meat or firearms, or capping spending during crises. Posts on X and reports from the IMF, so the International Monetary Fund, highlight how CBDCs could embed smart contracts for policies like welfare or consumption vouchers, meaning your money could expire or be restricted to approved users, reducing personal autonomy.
Computer says no.
Third, banking system disruption. If people shift deposits from commercial banks to a CBDC, seen as safer since it's direct central bank liability, banks could lose funding. This disintermediation risk could shrink their ability to lend, potentially triggering a credit crunch. A 2022 Bank of England paper noted that significant deposit flight could weaken bank balance sheets, affecting economic growth, especially if no caps or penalties on CBDCs holding are set. There are also cybersecurity threats. A digital currency is a high-value target for hackers. A breach in a CBDC system could lead to massive theft or disruption. The BIS has warned that central banks, often lacking the agility of private tech firms, might struggle to fend off sophisticated cyber attacks.
No way. I'm getting hacked.
A port scheme?
No, this is major. They've already burned through the NCIS public firewall.
Well, isolate the node and dump them on the other side of the router.
I'm trying. It's moving too fast.
Oh, this is not good.
For instance, a successful attack on a retail CBDC could freeze payments for millions, as seen in smaller-scale breaches of payment systems like SWIFT. Exclusion of the unbanked or tech-reliant. While CBDCs aim to boost financial inclusion, they could backfire for those without digital access. In Nigeria, the e-Nairas rollout showed low adoption among rural populations due to poor internet and smartphone access. If cash is phased out, those groups risk being locked out of the economy entirely. Monetary policy instability. In times of financial stress, people might flee bank deposits for a risk-free CBDC, amplifying bank runs.
I got $2,000. Here's $2,000. This will tide us over to the bank reopens. All right, Tom, how much do you need?
$242.
No, Tom, just enough to tide you over until the bank reopens.
I'll take $242.
A 2022 Federal Reserve analysis suggested this flight to safety risk could destabilize monetary systems unless mitigated by design choices like holding limits or negative interest rates on CBDC balances, options that could themselves alienate users. Cross-border complications. For countries with weaker currencies, a foreign CBDC, for example a digital dollar, could dominate local transactions, undermining monetary sovereignty. The IMF notes this dollarization risk could destabilize smaller economies, as seen with cryptocurrency adoption in places like El Salvador, but amplified with state-backed digital currencies. So these risks, summarized here, aren't hypothetical. They're drawn from real-world pilots, expert analysis, and economic principles. Their severity depends on design. A token-based CBDC might preserve some anonymity, while an account-based one tied to digital IDs, which is planned in the EU, could amplify surveillance. Poor execution or insufficient safeguards could turn a CBDC from a financial tool into a source of vulnerability and control. And that's it for this video. Tell me if you liked it. Tell me if you want to know more about CBDCs. I plan on doing a bunch of videos about it. And I'll see you in the next video.